All right, there's been a lot of information in the news lately about the Southern California wildfires. And as someone who grew up in Paradise, California, which burnt down several years ago, there's an emotional attachment to it, but there's also some practical assessment that we need to think about. Now, insurance companies, they really aren't evil. They really are trying to do the best they can, but they have to actually make sure they're covering their losses. And here's how they work. They charge premiums in order to allocate those funds toward the risk of something happening. Now, in California specifically, they haven't been able to increase their premiums due to legislation. So their premium rate hasn't been able to compensate the actual cost of labor and material going up a little over 37% over the last 7 years. So here's what that means. They're pulling out of those markets, and the only option that homeowners have is called the FAIR Act, meaning the state of California is providing insurance to these homeowners at their own risk. Now, there's about $600 million in there, and they're already estimating about $2 billion worth of claims coming through. And the only way they have to recoup that is those insurance companies that are in the state of California are going to be responsible to pay a percentage of their market share to help cover those funds. Now, what does that mean to you? The only way they can make up those funds is by offsetting and distributing those costs across the country, which means your premiums are going up, my premiums are going up. They may begin to shift the deductible amount, meaning, hey, you had a 1%, now they're going to only offer 2%, which means you as the homeowner are going to be liable to cover more of that share. Or they're just going to pull out of markets altogether. So the reality of it is you have a limited window and the time has already started. The clock has already started in order to figure out, hey, am I positioned correctly? Is my roof okay? Is my property okay? Can I maximize any policy that I currently have now before the rates go up? That way you're proactive in solving a problem versus reactive and figuring out later, man, I wish I would have done this.